Terrible week. How you feel today?
I'm still concerned because I'm seeing the recession on the horizon. And so what we're doing is that we're doing tactical asset allocation, looking at where we're going to underweight technologies, financials, and also consumer discretionary, because we're very concerned about that consumer. We're overweighting energy, material, healthcare, industrials, consumer staples, because that's where we're seeing some opportunities.
Okay. Pete Najarian, to you, your brother has been incredibly negative. In fact, this week he became incrementally more to the point yesterday, I don't remember a point in time in recent history where he was as negative as he sounded. Do you match up with John or not?
I'm more cautious than I would call me negative, but certainly, last week or so, Scott, you and I have talked about all the put activity that we have seen of late, right? We talked about the spiders. We talked about the Russell, the IWMs. We talked about a lot of different ones, the EFA, all of those different ETFs out there where there was massive put buying. So that certainly was an indication that somebody out there thinks that this market has a little bit further to go. As a matter of fact, Scott, they've been rolling down, which is a very smart trade for somebody who wants to continue to be in that trade. You can roll down, take off some of your profits, put those in your pocket, and still have a position to the downside. So we've seen that happening as well. That on top of the fact that we've been looking at that volatility index and looking at the VXN. The VXN's somewhere today, somewhere 36, 37. It's been over 40 already this week. It's been as high as 41. Then I look over at everybody's waiting for the VIX to get to 40. I don't think we have to wait for that. We've already seen the destruction that we've seen within the market over the last 2 weeks or so. I think what's happened in the last, call it 2 weeks, is when we look at what's really been getting sold, those areas in the market that were holding up, and finally, they're giving up a little bit. And I'm talking about Apple, Microsoft, NVIDIA, Google, Amazon. Those names over the last just 2 weeks, Scott, have been getting hammered pretty big. Yeah. So because of that, I tend to lean a little bit more negative. I wouldn't call myself ultra negative. I've got a reason to be a little bit more negative for you in a little while when we want to talk about volatility if you want.
Okay, and we will in a moment. That brings me to you, Jason Snipe. You've heard everybody's comments, and you've taken this week in yourself. Where does it leave you now thinking about whether we're close to a bottom or not? Because the ranges that you hear from people are, well, we're close to, we could still go down another 600 or so points on the S&P, which is unsettling.
No doubt about it. So yesterday, Scott, clearly was a big-time flush in the market, and we have CPI behind us. We have a Fed decision behind us. And if we talk about the Fed in catch-up mode right now, and we've talked about data dependency for a long time, they saw that hot CPI number and had to push, and felt like they had to push 75 basis points, right? And we've talked about the next couple of hikes kind of baked into the cake. The concern for me is what I don't think is baked into the cake, which is earnings revisions. We saw some pre-announcements from Microsoft. We saw some news from Target and Walmart, inventory problems, FX. These are kind of macro concerns for me as we move forward. But to Jenny's point, I do think we're closer to a bottom today than clearly we were in January. So I think you have to barbell it with some defensive aspects of the market, as Degas mentioned. And I think you do have to look at some growth opportunities because I think they're starting to present themselves. Even if you were dollar cost averaging down over the next couple quarters, you'll be happier in the long run. So I think you just have to have a long view and just really grind this thing out.